Hey, welcome, ladies and gentlemen. I am Ed, and I'll be sharing my thoughts with you today in an important session focusing on the stock and options for the very famous company Citigroup. So, why do I choose to discuss Citigroup? The stock is on my radar as it has had positive news and consistently over the past few months, appearing to be sound technically. When looking at stocks to cover on our watch lists, we sense there are opportunities to reap rewards, and this one case is not any different. So let's take a look at this chart together. Again, this is Ed. I'm looking at Citi. Um, this stock was trading at 53 bucks on April 1st. What you're looking at is the 1-year chart. On this, I'm using TD Ameritrade, standard layout. Feel free to mimic it on your own. There's two or three features on this chart that are important for you to learn. As you can see, there's various settings on the first row. Moreover, once you select one of those settings, which I believe are just simply time intervals, yeah, you just use the pull down and you're able to analyze what are called the shorter intervals. So many people refer to charts like these as candlesticks. You can do your own research on what those are. This video is geared towards people that are professionals, master's degrees, have office jobs, or business people, that have some money saved and are real interested in learning as a group and coming together to make executive decisions on stocks that look promising, and using educational outlooks like these will turn you into a better trader, I would hope. So pay close attention to what I say. Ask me any questions in the comments. I'm not going to breeze by this in any way, shape, or form. So I'm looking at a weekly outlook, and the second row down really just talks about additional information that you can put on your TD Ameritrade chart. Okay, this is called the simple moving average, um, uh, you know, statistic. I believe the TD Ameritrade, um, template or GUI or user interface will allow you to put a few more statistics on there. I've chosen to really keep it light. So based on my own education and knowledge, we look at short-term moving average, and you'll see it in parentheses with the number 10. The medium term is 50, and the longer term is 150. These are basically looking at the stock compared to 10 periods ago. If it's in orange, blue, it's looking at 50 periods, and the gray there, it's looking at 150 periods. Um, so in this particular case, we are looking backwards 1 year. So effectively, 10 is referring to 10 days, although I'll double check whether or not this is looking at 10 weeks, because it looks kind of funny as I talk about it. And this is supposed to be a mutually involving conversation about stocks. But in the short term, looking back 10 days, which is what I think is standard, we're looking at the number of days on the moving average. Um, we are basically following the stock and the candlestick along a curve marked in orange. Um, so you'll be able to see the orange line, the blue line, and the gray line if you focus, clearly in the center of this chart, and disregard the candles and disregard the letters. So if you look just at the orange chart, it looks like it's been a little bit bumpy. The blue has been a little more consistent, and the gray has been about flat over the past year. For me, the flatness on the long term indicates that the stock can vary, considerably between $50 and $80, yet maintain an average right there between 50 and 80 in terms of um, its value, its price, and um, consistently over time. So the beauty about looking at that long-term moving average is like I said, if you want to compare the stock at any point in time to that average, what you're doing is you are effectively analyzing what is happening and what could happen. So when I look at a stock that's below the average there, like like we see, it's clear that um, it is uncertain right now whether the stock can continue to maintain this long-term average, which is relatively flat. Here's why. The short term has been sloping down um, kind of consistently since June of last year, um, which was, a high point of the history of this particular stock. It looks like it traded right around 80. It's highlighted um, in fact, on this chart with the letter A. So intuitively, um, the stock's been on a decline, and further analysis is required to determine whether or not this stock is about to rebound. But if I was to really, be educated in my guess, I would suggest that due to the long-term moving average being pretty sustainable there at $65, this stock is probably going to start working its way back up to that $65 figure. So let's check in on this stock in a month. Remember this video. We're on slide 2, estimating that stock could push back up towards the moving average of 65. Now, you'll notice that the midterm moving average, um, which is marked in blue, is closer to 70. And that has been sloping up. The short-term average marked in orange, in comparison to the other two, is declining a little bit more precipitously. But again, the short-term trend really doesn't mean much, right? Because in looking at this chart, if you were only to look at the stock's performance between January and today, you might see that, well, frankly, between January and today, 2 months of the short-term movement has been pretty flat or going up, and it's only in the last month that it's gone down. So there are many things like the Ukrainian war, prognostications about the stock market or economics in general may have caused it to do what is considered a bit of an aggressive move. So although this stock hasn't exhibited much aggressiveness, when it did show that aggressiveness, we'll take you back to June of last year. It's a big red candle. It was after the stock had made a pretty steep increase to point A. People, I think, at that point in time were convinced that over the past couple of years of investing, that it was worth their while to, you know, sell some of their positions and make some money. Especially since we are in uncertain times, it's not unusual for people to kind of take money in, right, in uncertain times and put it back in later. My point is this stock has this potential to get back up there into the 60s in no time. So because you just never know when the economy is gonna, heat up again, and it's too uncertain with world events and so on to really be able to make a decision without a lot of education. And based on what I've seen in the past couple of years, especially during the Trump administration, the stock has have been pretty phenomenal. And there's no reason to think that Joe Biden's economic policies are going to, destroy the same momentum that we've had in the past. I think his goal of reelection, counterintuitively, um, or obviously, is to get reelected, and the economy's got to be the focus. You've seen these rocky roads that he's inherited from the previous administration. So again, this first introductory video that I make is really to get you familiar with understanding TD Ameritrade. What are the basics, the moving averages? Next, we'll look at what did I do to this chart specifically. I added the letters. It's very simple, obviously. I'll explain that in a moment because that wasn't part of TD Ameritrade. I did an overlay. The overlay was helpful, and we'll discuss it in more detail as well. But what I did do on the TD Ameritrade platform a little bit was use the draw 10 lines button. You can effectively move your mouse over wherever it is you feel you want to draw a line. And you'll see in the overlay, there's a flat straight line underneath the A, indicating that is where the price um, you know, has been. And I was extrapolating from May of last year to November of this year to indicate that's a period of time where that price point A was in play and price points B, C, and D were in play. That rectangular area that I drew shows that the stock was hovering between A and B. Then it wouldn't go down further than B. It wouldn't go up higher than A. It would, come down close to B again at point C, head back up towards A, come back down towards D. When a stock does that sort of very constrained activity, otherwise known as channeling, um, you're in a position to really observe um, and obviously feel um, you know like you can understand the basics of the stock. It's not particularly interested in going up too much or low too much. So when I see something like that, I'm very, very interested because I don't have a lot of risk. I know the stock on average is traded between 70 and $80 for about 6 months. So when I see something like that and I'm comfortable with the price and I see that it's been in this channel with a tendency to go to A, I see no reason to buy when the stock is closer to points B, C, and D. If I bought at point B, I would have made a little money exiting, sometime in August. In fact, I think a lot of people did that. In these economic times, people bought stocks and sold them to make short-term gains to, add to their savings and cushion during this difficult time. In fact, what you'll see is that come December, New Year's, um, people continued selling. Now the channel, seemed to be, a little distinct after point D, and here's why. Looks like at point E and F, um, people continued to feel the pressure that they wanted to sell. In other words, they felt that during these economic times, let's not rush into this potential, um, you know, risk of having not enough money on hand in cash. And that's why we're looking at that channel. Um, and um, it's important a mature investor to know that, okay, we have people that have decided that they want to keep some cash on hand and sell these important stocks that aren't going away. The expectation is the stock is going to go back into that upper channel between A, B, and C. And now is obviously a chance to confirm that you know you're interested in this stock in the long run. So again, there's so much to say that's both pessimistic and optimistic about this chart, but you know that's why we discuss this. I don't see an indication that this stock will go much further below 50. And I'm recording this video on April 15th, okay, 2 weeks after this price was printed at $53.35. Today, I think we're trading right around $51. And that's, I think, as far as it's gone in some time. So I think, in all honesty, when we reconvene on this stock, and we'll say conservatively, we'll poke our heads in on it every week, but I'll do a thorough analysis in 2 weeks. Again, we're about a quarter of an hour into this video. Thanks for your patience. I just wanted you to notice things that you can do. You can draw your trend lines and then just observe the the statistics that are presented. So I see an opening price of $79.49, a high of $80. Now, where is that number coming from? When I hovered my mouse over point A, you'll see a dark vertical line right there in June. So what it's focusing in on is the start price of $79.49 at that particular point in time. So there's a candle under there between the A, um, between the A and that red line. You just can't see it too well. That candlestick is between 79 bucks and 78. Um, that's a very tight range, and that happened during 1 week. As you become more advanced in stocks and bonds, you'll notice that when you have candlesticks that are unusually small, like the ones between points C and D, they indicate some indecision. And, indecision certainly means like, okay, we're not sure if this stock is going to go up much higher. We're not sure if this stock is going to go much lower. And sure enough, it's just going to hover around that area for some time until those, moments of indecision have stopped. Um, Sometimes these moments of indecision indicate a change in direction, um, to the upside, the others to the downside. So at point A, you'll see this one little candle before the big, long white one there under point E, excuse me. And sure enough, that moment of indecision led to an increase in the stock. Again, underneath the letter F, you'll see, and E, you'll see some indecision. And you see, experienced traders will say, okay, these moments of indecision, those are the times when, okay, um, I'm going to use my options, strategy, which is to say I'm writing a contract on the stock, and I'm writing a contract to sell this stock at a specific point in time in the future at this price. So when they opened their short option there, when they opened an option at point E, they said, I'm gonna reserve the right to sell this stock right there at $68 because I see this indecision candle. The last time I had an indecision candle was at 60 just before point E. And look, I'm at $65. If I agree to sell my stock at 65 when it comes down to 60, well, effectively, um, I am protecting my shares because I know that, you know, I'm safe with this stock, or somebody else is going to ask me, can I sell my stock? So the option I have is to sell the right to sell their stocks at $65, and somebody who, let's say, owns $1,000, an institution, 1,000 shares, an institution will say, sure, Ed, I'm going to buy the right from you to sell the stock at that price. And since I bought it, you know, when it was above this price, we'll say at point A, well, then I'm protecting my interest in it since I believe that it's going down. We're going to discuss that in more detail tomorrow in my next slide because options is not something that everyone's familiar with and you need to understand. Okay, so we've covered a lot. I want you to ask questions. I want you to be engaged, and I want you to trust that yes, if you're learning stocks and you want to make money in shorter range intervals within a month, you need to learn how to trade options. And I am an expert at it, so I'll be glad to help bone you up on that. But you do have to hang on every word. You can't come and go. You're gonna have to listen to this video over and over again, and then ask questions. I'm at the 18-minute mark. I'm comfortable that you've gotten something valuable out of this, and we'll have a review session here at the end of this presentation. I'm gonna try not to go much over 30 minutes. Let's drive on. Great. So we're looking again at Citi. This is Citigroup. It's part of what I call a prognostication, meaning this is where I believe I can predict whether this stock is, something I want to maintain in my portfolio or add to my portfolio or eliminate from my portfolio. I'm going to call this the Citi grading schema. So from left to right, we've become familiar with Td Ameritrade. We've noticed, okay, Ed's switched over to the 3-year view from the 1-year. We're still using a weekly. We are still looking at the moving averages, the red, the blue, and the gray. You notice that on a longer time frame, the trends paint a more complete picture. We were looking at 1 year, and now we're looking at 3 years. So wherever I see the A plus, I've circled in the purplish colors. The first column from left to right shows grades between the A plus and B range. All right, so I'd grade that like a 91, 92. The reason that I want to highlight things in this particular way, and by the way, the first column is May to September, so do the math. June, July, August, September. It's about a third of a year. The stock was making good grades. What happens when the stock does good grades? Well, it goes up. let's look again. Next column over is from September to January. Um, September to January, and what is it, 3 years ago, 2019, okay, right before the pandemic. That stock was super healthy in a really good economy, right? Well, I mean, the economy leading up to the pandemic was turning up. Again, during that period, there were no periods of time where that stock could have been graded as an A plus. Okay, and hold up, what are we talking about? Why are you grading this as an A plus? Those of you who have experience will understand that when a stock is trading above all of its moving averages, it's considered, like a valuable stock. The general conditions of buying stock are that it's above moving average that you consider to be indicative of safety, like the 200 moving day average, the 150 moving day average that we have here. All right, so what did we just cover? For 6 months before the pandemic, the stock was at a healthy price at about, you know, 73, $74. It fluctuated between 70 and 80. Economy kind of went downhill for 6 months, maybe even longer. And so the next two columns take us right into the halfway point of 2020. I am toggling between my TD Ameritrade account and this slideshow just to confirm. So the third and fourth columns are January to September. Third and fourth columns are January to September of that pandemic year. And once we got out of the pandemic, okay, the fourth and fifth column, first, second, third, fourth, fifth and sixth columns come into play, and that stock decided to come back to its previous high of 80. Which, as we had seen before, was the area of significance for 6 years prior to 6 months rather prior to the pandemic. So let's do the math. Column 5 and 6, another 6 months looks exactly like the stock did previously. So what happened in the seventh and eighth columns? A lot has happened, but most specifically, what has happened is two things. If you've had a pulse and read the newspaper, you understand that the Federal Reserve has gotten a lot of interest. Now, the Federal Reserve has decided to start reducing, obviously, its very, very, very involved status in the American economy, meaning like it's been buying assets that are generally owned by people and corporations and bonds and giving stimulus checks and so on and so forth. Um, the reason that matters is people are wondering if the prior 6 months, which resembled the 6 months prior to the pandemic, are a correct gauge of where the economy is. And many people will say, well, if you take away the money that people had in the past year from the stimulus, the economy might have been different. So there's a little insecurity in maintaining those 6 months. You see what I mean? Prior to the pandemic, we were in this range of 70, $80. Now people are saying, well, if the economy turns down, I'd really like to know for sure whether owning Citibank is a good idea or whether the banks are going to have problems again. So people, for the most part, have been conservative about investing in banks when they know full well that based on the Treasury, based on the continuing influence of the pandemic and the Ukraine war, like there's a lot of uncertainty as to where people should be investing. And again, the typical discussion about stocks and bonds is stocks and bonds and what's your proper allocation of a portfolio and sort of balancing portfolio, isn't it? But people rarely talk about cash. So when the stock market goes down, should you be scared and terrified? Not really, because if you own stocks and bonds, they're probably in your 401k plan, and there will be movements in the stock market based on large investors, banks, institutions that decided to like maybe sell some of their stock, right? Because they wanted to pay off a debt or save for the future. So what they don't teach you about downturns in the stock market is that instead of holding a stock, people are holding cash, what they can get for it. So in an economic downturn, people will sell their stocks because they prefer to have cash on hand than to have like no access to cash. So I don't really always look at stock market crashes and the media's interpretation of stocks going down as really a fear situation. It's more of a fear of the future, not a fear of the present. So where am I? I believe that the stock will return to those 6 months that we see at the beginning of the chart, and as a consequence, I'm feeling like All right. This stock has maintained in the past 3 years over a year of A plus ratings. It's maintained another, I'd say, you know, another 6 months at a B. And then due to the pandemic, a few things. So I think overall this stock is looking good. It's good for the long run. I would not be surprised if the bonds and the increasing interest rates that we're experiencing do hedge inflation. I'd be surprised if they don't do their job, to be quite honest. I think inflation is going to calm down. Um, and people don't always know what to think. So they're going to err on the side of caution. And finally, I want to give you my 2 cents. The stock market and what the big institutions do is 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 fear mongering, but it's not fear mongering at the people or the planet. It's fear mongering at the Federal Reserve. It's trying to tell the government what to do. It's telling the government, yo, man, we're not fully recovered from the pandemic. And so if during the pandemic we weren't making an abrupt, decision to, stop investing in the economy, um, well, why, why don't you start reconsidering what you're trying to do when you try to influence, the economy? Many people like myself understand that these interest rates that they're proposing to raise by like a quarter of a basis point every so often, or a half basis every so often, which is hundreds of a percent, is being done to sort of appease the public, to make it seem like the government's doing everything it can to contain inflation. But the inflation problem is obviously going to go away in a robuster economy, and it's going to go and be offset tremendously by the fact that salaries have gone up. But the media only talks about the bottom line inflation and how it compared to pandemic lows. It's really stupid. There's no reason to think that this economy isn't going to return to healthy status within a year or two. And if that's the case, you don't plan on retiring in a year or two, why don't you start investing now? That's the takeaway. I hope this grading scheme was of use to you. It is to me. I came up with it really while making this video. I was really just analyzing things and realized that over time I could evaluate the stock and compare it to its performance in the future. So we'll reconvene every couple weeks or a month on Citigroup. But for now, I've given you almost a half an hour's worth of knowledge. You haven't paid me a penny. Next time, I expect you to contribute with comments, likes, and if you like serious discussion, we'll arrange some live in-person meetings, and I'll encourage you to maybe buy a membership, $1 a month or something, okay? Or $5 a month to be fair. I'm in this to make some money on the side, okay? Talk to you later. Okay, this is my bonus slide. We've focused a lot on a stock called Citibank, and we're going to talk a little bit about another IT stock and what you can do in terms of analyzing things on your own in your free time. I discovered Akamai and put it on a watch list probably a couple years ago. Um, and yeah, I'm a YouTuber. Like I didn't randomly wake up one morning and think of being original and create a YouTube video, right? Like I clicked on this link, on that link, learned about, you know, big time, investors. Okay. I think it's Charlie Munger who's influenced the big guy over there at Something Hathaway. Uh, there's Ray Dalio, and then there's a couple guys. I'm not afraid to mention them to you. There's a guy named Dan with the Chart Guys, um, and he's been very inspirational. He does this full time. He's about 10, 15 years younger than me. He did it right out of college. I'm in my 40s, approaching 50, and he's probably 10 years younger than me, and just a great, lovely person. I learned a lot about what I've described here to you, but I've also done my own education. I did dabble in selling annuities and so forth, and had to get a license. So, but it's the experience really, and then learning things on the side on your own through YouTube that help. I'll quote Dan. I'll quote a guy named Charlie Moon. Charlie Moon is from Chicago. He was exposed to the Chicago Board of Trade, obviously in options, by living in that area, and he's done really well. And he's put together a platform with a few other traders that are famous in Chicago. Options traders are a little different, right? They're based out of Chicago, is the hub of financial and economic activity in the US and the world. It trades way more than you would find on stock markets in New York City or wherever, because the options are talking about commodities, cattle, wheat, futures, as well as the regular stocks and bonds and ETFs. So you are a very, very lucky guy if you're able to learn from the best like I did. And so I've done my fair share, about sharing you. I actually paid to learn from them, and to sit in on their chat groups whenever I have a chance. So I do pay a lot of money. Um, so what you're getting from me is experience and exposure and education. Akamai was on a watch list I created through, my own education and original interest in making money in the short term by investing in IT stocks who have potential to grow or be first movers, as they say in the Harvard Business Journal, the first mover advantage. Yes, I went to business school. Yes, I had to read segments of that. Anyway, um, let's look at Akamai a little more. I will allow you to quickly, jump in on the analysis. We've got a couple of features that I'm using here that you've seen before. Moving averages. We have 24th of January as the first column over from left to right. So you do the math. We're looking at effectively a little over 3 months here. Now, as we sit here and talk and get to know one another, our goal is not to get brave and overconfident and cocky. Our goal is to slow down, slow the trading, so that we're trading in a way that's rational. Like I'm not shooting from the hip. I'm prognosticating into several months time, so I'm not in a rush to drop what I'm doing and buy stocks and bonds left and right based on what I see on the internet. I'm trying to support my decision that investing in the next month or so, if not necessary, is something that motivates me, and as a consequence, well, I want to make the right decision out of the hundreds and thousands of stocks and options and blends and so forth that I can do. Well, if I was to do a thorough analysis, how much would I get done? I maybe would trade once or twice a year because that's how long it takes to do an analysis on everything, right? So this education, this cohort building, all these things are important. So just double checking my TD Ameritrade account here, Akamai today. I must have been looking at the 3-month chart. They only give you those intervals, and I must have cut it off on this particular chart that I show. So yeah, so I am looking at the 3-month. And I drew lines to show that, well, so Ed was interested in Akamai because at the end of the 3rd month of trading, I noticed what amounted to a change of direction. So we've got these little red lines pointing down, and then they're starting to point up. Key points that I wrote down there are uptrends on all 3 moving averages. That's pretty unique. We didn't see that in Citi, did we? And remarkable symmetry of the points from highs and lows. Okay, so the top line is a connection between the high prices of the stock during the past 3 months. You notice they're in an uptrend, and the bottom line is focusing on the low prices of any given candlestick, and it looks like they're symmetrical. It looks like, they those are straight lines across many points that show that, okay, the stuff on the lines is not going to go above or below that. Those are clear channels. So if you're really lucky and are able to buy the stock in the middle of a channel and it happens to be going up, well, let's look at 21st of February. If you bought the stock right there around 100, it's trading at 120 now. Like, what? Who doesn't want to make 20% on $10,000, right? Anyway, we're going to continue this analysis next time, but I wanted to throw this slide into you to show you the beauty of what you can do in analysis. And I'll share more stocks as time goes by because I do have tremendous watch lists and tools that I can just scan, dozen or so stocks, and I'll start doing these in more bulk. I'll show you 4 or 5 at a time. If you pay, I'll show you 6 to 10, all those things. Because, you want to learn and have confidence in yourself, not depend on someone else. Enjoyed making it. See you later.